Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report that's going to shed some light on how this company is powering forward, or maybe just trying to keep the lights on. Grab your coffee because we're about to decode some electrifying numbers. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings and more. So what we have here is a current report, basically a quick update from a company on really important events that have happened. This report is from the 24th of October 2025 and it talks about Idaho Power Company and its parent company, Idaho IDACORP Inc. The most important date here is the 24th of October 2025. That is when pretty much everything we will discuss today happened. Let's talk about the companies involved. We have IDACORP Inc., which is like the big boss, and its main subsidiary, Idaho Power Company. Think of IDACORP as the parent and Idaho Power as the hardworking child that generates most of the income. They are based in Boise, Idaho. Not a lot of surprises there. Their common stock is traded on the New York Stock Exchange under the ticker symbol IDA. This means that regular people like you and me can buy a piece of this company. Now let's get to the juicy part. This report is all about a major rate case for Idaho Power Company. These rate cases are super important for utility companies because they determine how much they can charge their customers. It is like asking permission to raise prices. Back in May 2025, Idaho Power went to the Idaho Public Utilities Commission, or IPUC, and asked for a pretty big increase in their rates. They were looking for about $199.1 million more in annual revenue, which worked out to be about a 13.09% increase for their customers. They also asked for an allowed profit margin, or return on equity, of 10.4%. This is how they justify asking for more money. They say it's to cover their costs and make a reasonable profit. But here is where things get interesting. On the 24th of October 2025, instead of fighting it out in a long and potentially messy hearing, Idaho Power and other parties, including the IPUC staff, reached a settlement agreement. A settlement usually means everyone compromises a bit. So what did they agree on? If the IPUC approves this settlement, Idaho Power will get an increase in annual revenue of about $110 million. This sounds a lot, but it's less than what they originally asked for, and it represents a 7.48% increase for customers. They also agreed to a slightly lower return on equity, 9.6%, and a lower overall rate base, which is the value of the company's assets used to provide service. They are also adjusting how they account for power supply costs and other expenses. This means that starting the 1st of January 2026, customers in Idaho will likely see an increase in their electricity bills. This settlement is a pretty big deal because it sets the company's prices for quite some time. It is a negotiated outcome, which means neither side got everything they wanted, but it provides some certainty. So instead of the 10.4% profit they initially wanted, they've settled for 9.6%. This is a reduction, but still a healthy profit margin for a utility company. And the rate base, the value on which they calculate their profit, is now around $4.9 billion. This reflects the cost of all the power plant's transmission lines and other equipment they use to deliver electricity. They've also agreed to a lower base cost for their power supply. This is good news for customers as it means less money spent on buying electricity. It is a reduction of over $16 million. Something that's become increasingly important for utility companies, especially in the West, is wildfire mitigation. Idaho Power will be able to defer some of these costs, meaning they can put them aside and get reimbursed later. This shows they are taking steps to manage risks associated with wildfires. The report also talks about how they handle tax credits. This part is a bit technical. Essentially, they've modified how they share certain tax benefits with customers, placing a cap on how much they will accelerate the amortization of these credits annually. This will affect how much of the tax savings get passed on to customers versus kept by the company. It is worth noting that the IPUC staff had already reviewed many of the company's projects. If they find issues with any projects proposed after July 2025, those will be addressed in the next rate case. This separation keeps the current settlement focused. This settlement doesn't stop Idaho Power from asking for another rate increase down the line. They can do that if their costs change significantly or if they need to make major investments. The company is playing it safe by saying they can't predict the outcome, but they are expecting the new rates to start in January 2026 if the IPUC rubber stamps this agreement. Now, like most corporate reports, this one has a section on forward-looking statements. This is basically a legal disclaimer to protect the company. They're saying that any statements about the future are just estimates, and actual results could be very different due to various risks they've mentioned, like regulatory decisions or changes in tax laws. They're essentially saying, we hope this happens, but we can't promise it. So, if you see words like anticipates, expects, or may, it means they are talking about the future, and you should take it with a grain of salt. They're not guaranteeing anything. They list a bunch of risks. These include decisions from regulators like the IPAC and the Federal Energy Regulatory Commission. They also mention changes in tax laws and the possibility of not being able to get financing if their credit rating drops. And finally, the signatures. This tells us who is officially signing off on this report. In this case, it is Lisa R. Groh, the President and Chief Executive Officer of both IDACORP Inc. and Idaho Power Company. So, what is the story here? Idaho Power is a regulated utility, which means their pricing is heavily influenced by government bodies. They asked for a significant rate increase, but through negotiation and compromise, they reached a settlement that will lead to a smaller, yet still substantial increase for customers. Effective next year, they've managed to secure a reasonable profit margin, addressed some operational expenses like power supply, and acknowledged the growing concern of wildfire mitigation. Looking at this, Idaho Power seems to be navigating the complex regulatory landscape effectively. They got most of what they needed to continue operating and investing. While the settlement likely appeased some of the consumer advocates and regulatory bodies by moderating the requested increase, the risks they highlight are typical for a utility company, but these are things they and their parent company have likely managed before. The key will be how effectively they manage their operational costs and investments in the coming years, and how the IPAC views their performance in future rate cases. A strong focus on efficient operations and transparent communication with regulators will be crucial for maintaining customer trust and financial health. Alright? That is our breakdown of Idaho Power's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the settlement is fair for both the company and the customers? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.